Video demonstrating how QuickBooks calculates the profit that you make on inventory items that you sell. Because I know if you have a lot of different inventory items in stock and they're under more general category names, let's say you sell watches and you have every Rolex you have in stock under one category, Rolex. They obviously range from very cheap watches up to very expensive watches. So if you book one as $5,000 that you paid and another one for $50,000, and then you sell one of them, how exactly is that profit getting calculated? So I thought I would show you how it works with QuickBooks now. So let's go in and let's buy 2 watches. And lucky day for Bob's Burger Joint, they now sell Rolex. So let's go ahead and buy, let's just make a category. And this is how I would say a lot of people do it, is they aren't very granular about their category. So let's just say they have Rolex here. You don't have any. Bob made his first sale today. I need to move myself for a second. Save and close. So we bought this Rolex. It's a blue Datejust for $5,000. So this is the first transaction that we're booking today, is this $5,000 transaction. And I think I'm probably better off over there. Okay. So we bought this Rolex, and that's our category. So we're going at Rolex. So let's go to sales, products, and services, and this will show us what we're listing. So if we go here, Rolex, we have 1 in stock. So let's go ahead and buy a second Rolex from the gas station. That's probably a very authentic Rolex. Okay, so 10,000, and we bought a Daytona. So lucky day. So now we have 2 Rolex in stock, one of which we paid $5,000, one of which we paid $10,000. And note the order in which that we purchased them. So we bought the Datejust first for $5,000, and then the Daytona second for $10,000. So let's say we have 2 Rolex in stock. Now we want to sell one, and we sell the Daytona for $11,000. We should book a $1,000 profit, but I'll show you what happens. So we sell this Rolex to the basketball camp, of course, because they need a lot of watches. Rolex, $11,000. So we should show, I mean, we sold the Daytona. I forgot to put it on there, but let's say we sold the Daytona. But now if we go to our profit and loss, we show a $6,000 profit. It's because QuickBooks does first in, first out inventory profit calculations or accounting, however you want to say it. So whatever you input first is and let's say you buy 10 watches, and then on the 11th transaction you sell one. It's the cost of goods sold is used on the first item that you purchase. So if let's say I can show you this. If we go to our profit and loss and we go to cost of goods sold, the cost of the good that was sold today, they calculate as $5,000. So my advice to you would be to be as granular as possible when you're doing your products and services, your inventory categorizing. Let's say you sell watches, break it down by the color, if you want to, the best way to do it is just to put in the serial number, would be probably the most efficient, because then it's 100% unique. But try to be as granular as possible if you care about your, having an accurate idea of how much money you're making. If you do your profit stuff on another spreadsheet or something like that, it's not as important. But if you want to see in QuickBooks exactly how much money you're making on each individual thing, then it's probably best to do that. And something else I can show you is, so I'll prove to you that this is the case. So now let's go in, let's sell a Rolex to the Bird Sanctuary. Let's say we sold that $5,000 watch for $6,000. Now it's going to book us as a $4,000 loss on that transaction. So this $1,900, it should be $2,000 because there was tax involved, but that $2,000 is actually the accurate amount of money that was made on both transactions, because now they're both canceled out. But that's, obviously you're showing, well, why did my profit just go down by $4,000? It's because it's calculating based on the second item that was purchased. So I'll show you that in profit and loss, just so you think I'm not crazy. We go in here, cost of goods sold, 10,000. So it's calculated by the first one that you buy. So I recommend that you be as granular as possible with your inventory categorizations. Thanks for watching. I hope this helped even a little bit. Thanks.